Dave.
There he is. There he is. What's going on,
What's going on, guys? Where are these fireworks coming at? Is that inbounds? We're checking for inbounds. Go ahead, guys.
Hey,
What are your? I gotta get your thoughts here, Fari, because
Fari,
we
what do
had
you
a
got
lot
going
of.
on in the background there? You got some hungry animals?
As I said, we're here. What? You have what? I said this is NORAD. Sailor, give me the program.
This is NORAD. Well, what
Hold
are they
on.
saying at NORAD here on this market rally? Because we had a lot of the momentum stocks, market money coming out of them yesterday. Now we're getting a snapback rally here today in a lot of these same stocks in the overall market. What are your thoughts here, Fari? Is this one of those snapback rallies to sell, or was yesterday's sell-off just another buying opportunity and we're just going to continue higher?
Well, we would go back again to Hunter Killer Sub on Twitter. We post charts on Saturdays, talk about market timing. The juicy part of that answer is not going to be answered now. It'll be this afternoon in our monthly market timing. But I will give you this. I'll give you the key part, okay?
Yeah.
Trust, breath trust, breath trust on a timer chart. The first chart we put in on Saturday, okay? If you look at that, we had an analog back in February. We had the same kind of wave. That is, we went from a very, very oversold to a quick, short-term overbought in 10 days or less. Okay? That followed the big drop we had in February 1st. Okay? Now, we've had we've had a bunch of different, analog this year against itself very quickly, but this is a big one that we see. And it hasn't happened since. But go back and see what happened after that low, which was around 1800 area, okay, on the cash. I'll give you exact. 17, actually lower. 1738, hallelujah. 1738, 39 was a low. And then we went 10 days like the advanced decline, the breath thrust. Not the number, not the price. Price pays, I agree. But the internals that gives you the story, the picture. Okay? You gotta watch the internals. If you look that run up, look what we did here in about that started the push up from the 7th of August and lasted into 19th. Okay, in that 12 calendar days, okay, which is less than the 10 trading days. Look how we ran up. All right. Now look where we were after that. That's historically, and this is the work done by the MTA Charles Darwiner, Jason Gupfert, my good friend out of Minneapolis, Sundial Research. If you look at that pattern, okay, you don't see that pattern often. When it does, 3 months, 6 months forward, we're much, much higher. Okay, so is it a buying opportunity right now? That's a good question, Dennis. But I have another question before I can answer it. What's your hold horizon? Okay, if you're trading like me, which I'm holding right now, given the range is so small, 2 handles, 1 handle, 2.5 handles, and get out and happy, and then repeat it 2 or 3 times a day, rather than one big hold, because that's kind of gone away. Okay, unless we get a craziness like that MH17 problem, that it hits, market goes crazy, and then we go back, and then 2 hours later, 3 hours later, it goes back to what we call scene of the crime. Okay, when it does that, then you can play and get a little bit longer. But right now, you got to be cautious. Volume is still, it's also, post Labor Day, people coming back from Hamptons. My point being, if you're keeping your bets small and you have a short-term view, we're getting the vibration. If you're looking at it from a market timing point of view, when you are investing for retirement, investing long-term, investing multiple months, investing, a long swing trade, up. And the validation of that is, what has changed? We still have cheap money. We're still with a big, the global labor market that we don't really see much shortage. Inflation is somewhat checked. We're printing a lot of money, but we also screwed the net savers. But none of those are going to change. Now, will there be other changes coming in? Oh, of course, you have to be prepared for that. But that's what I call the catalyst. Watch for it. You just can't create a catalyst in your mind. It's not a fantasy. It has to occur. Until it does, pull up 5 degrees, Open up the throttles and let it take off.
Fari, we had a lot of discussion about some of the reversals in the Momos yesterday, and they seem to be bouncing back. I mean, when you see that kind of activity, I mean, do you lick your chops and try and find a place to get long or cover short or something, or are you just really not? I mean, because there was a lot of activity right in that 10 or first 10 or 15
Talk about
minutes.
Apple. Even,
Yeah, let's talk about Apple.
Oh yeah, exactly. That was a classic yesterday. Yeah.
Yeah, I mean, what do you do? I mean, do you try and join the herd on something like this and short into it, or are you just patient? You pick your points and you wait to saw on a recovery.
Well, first of all, I would use some options.
Okay.
Something like Apple, because options are very active, they're kind of cheap, right? In terms of the bid spread is tight. Vol is not very high. I think Vol yesterday was Apple was around at the money's like 14, 15, if I remember right. So these are not too expensive. They're not richly priced, okay, from a point of view of floor market makers. So if you picking up your, yesterday there was a talk in our chat was watch 100 on Apple.
Yeah.
Let's see what's happening on Apple, okay? I think we traded, 99 something, 99, 80 or 99, 85, something like that.
Yeah.
Or maybe slightly even lower, because I do recall those prints. Okay, those situations, okay, I would say I put a decent indicator on it. Don't mess around. You keep the same set of charts you're looking at. Just change the name. Put Apple on the charts you usually look at, and say, okay, you know what? This got a lot of chop. There's news coming on a Tuesday. That's a big event. By the way, Reg FD, full disclosure. We're in the process of getting it into a trade. We did not get filled yesterday because his royal tightness, that's me. I squeeze. I squeak when I walk. Yeah. His royal tightness gave a very tight entry, and I told everybody you wait for this price. You do not get in ahead of this price unless, superseded by another instruction from me. Why? Because of this whole chop that's going on. But we still want to be long for Tuesday. Okay, and probably it's going to get juicier before Tuesday. The sooner we get in, the better it is. Can't give the trade away, but here we are sharing it. But that's okay. The point is, we get into a trade like that, and then you take some of that unknown roll out, because your downside now is risk defined, right, by your premium.
Correct.
Right. And if you're an option junkie like me, you want to go spread or back spread. Why? I want more juice. I want to tighten up. I want to go in a little less, kill some volatility, kill some theta, and in the meantime, I have less on the table, and maybe I'll buy more contracts. You see my point?
So you
define, hey, how much I want to risk. You look at your outright on the option side, and say, okay, this is what my outright is. Okay, hold on. This is the cost benefit of that. It's no different than making a decision at Northrop. It's really cost benefit analysis. You come over to a spread and say, okay, no, you know what? This one's got a little bit more better attractions for me. I have to I can put up a little bit less. I'm killing the theta on the top because I'm shorting one leg, and I'm also killing some of the vol. Take that on. So now maybe I can put instead of 10 contracts, I can buy 25 or whatever. Depending what. And then you have to look at that number of contracts as a percent of your portfolio. Are you, going over 2-3%? Because then you really try to bet the farm, and that's not advisable. But this way, at least, you're putting a bracket on your play. Anything below the bracket doesn't matter. Anything above the bracket does matter, but it's not yours because you put a spread on, right? But that becomes your game plan right there between the long leg, the long call on the bottom, and the short call on top. So that's the way I would get in there. Otherwise, look, we still don't have a lot of people back in. That is news driven. That play was Apple was. You also had Samsung that introduced products. So that was a pressure. And then of course we had the iCloud issue that has been around the marketplace. Now, some other names you guys look at, that becomes a little bit tougher.
Okay, Fari.
And that's not my area. I don't want to answer or
I know,
things that I don't do.
Yeah.
It's just figment of my imagination. I don't. For example, GoPro, for example, has options trading right now? If it doesn't, I probably don't want to touch it.
Okay, hey,
Why?
Fari.
It's also very small.
Fari, we got to change subjects here, and I mean, we love you're
Go
on
on.
the show. We love your sigmas and your technical trading, but you also with your military background. You follow the macro events, and there's something going on
Right.
here. Rob Hood wants your opinion. He says, does
Sure.
Fari see any parallels with the recent terror alerts, London and Libyan planes missing, with the warnings made in the late 90s that were ignored by our government? Do you see any parallels there? I mean, there's 10, 12 planes missing. Does that have something that,
What?
and
Well,
you
I
didn't,
haven't heard.
you didn't hear
10,
about
12
that?
airplanes were missing?
Yeah.
I
Libyan,
haven't seen the news this morning. I apologize then on that issue.
Yeah, yeah.
Wow.
Actually, yeah. Over. Actually, it happened yesterday or the day before, and it's kind of been glossed over. But yeah, it's been reported on a couple different wires that.
I heard one plane was missing, Libyan, but that's all I had
think it's
at the
11.
time that I read, like last night. Yeah. I don't know if there's a parallel there or not. First of all, I haven't read the news in detail. I haven't dig in at all. My apologies to Rob. But we have, one thing is common here, okay? Some people out there don't like us. Now, let's analyze why, okay? It's what I call unintended consequences of foreign policy. I'll be gentle here. Foreign policy mistakes, okay? We have good intentions. We don't, we went to Iraq, but we gave it back. After 18 months, we gave sovereignty back. We're not occupiers, okay? I understand that. And the population is war weary. We already are in two fronts and many fronts, okay? But from their point of view, the guys on the other side, obviously, they think we're the bad guys. So the way we maneuver to come up to some sort of a consensus, in any given battle environment, if you will, okay, battle space out there, we're going to make a lot of people happy, and then we're going to get a small minority that's going to go nuts on us. And that's what I call the unintended foreign policy mistakes. Not errors, not flamboyance, or we took advantage of people. No, but errors happen. Okay, as Don Rumsfeld, my schoolmate, says, a plan for war is good about 2 hours. After 2 hours of war starts, you throw your plan out of the window because so many other issues come in. And that's what happens in these conflicts. We're lucky, we're privileged, we're here, protected by two oceans. Imagine if we were in those areas. That's nuts. So, but is there a great parallel there? I really need to study that. I don't know. Look, I grew up in that area, like foreign policy and nuclear diplomacy and so forth. I was a student of Woodrow Wilson School at Princeton, same school General Petraeus went to. As a matter of fact, he and I, when we met, we talked to reminisce about those days. We were not in the same class. No, it was a little bit after me, because he was in there for his PhD. But my point is, what they teach us there is, you got to get the facts, you got to study, you got to look at the data, and I have a hard time believing these patterns will be matching something 20 years ago. Okay, because so much has changed, and part of the problem we have right now, whether it's right or wrong, and we should stop from participating right there, is the glorification of the bad guys by even our team, the gruesome videos we see. The difference here is Twitter and YouTube. Twitter and YouTube. One, everybody's got a camera, so you can record it and you can play it for free. Look at it from those point of view. Listen, setting up a video server is not expensive here in Chicago. Okay, or in the U.S. We have one for our desktop. That's different. So we have private videos of the trades we're looking at and so forth. Boom, you can show it. That's different. But for over there, they can set up this video server by uploading to YouTube, and they hit their social media, which is Twitter. That combo has changed a lot of ballgame. Some of this stuff we see, they're playing with us. They're using us and our emotions to get a reaction. What we should do is not to fall in that trap. I tweeted after a Foley video, I said, guys, talk about what he has done. Positive, Foley, talk about him, the first journalist. Okay? Oh, now Sotlov. Look, stop retweeting the gruesome videos. Talk about what a good guy he was, what he did, what he accomplished, what was his mission, his internal mission. Why does he think he should be on this earth and do what? Where does his good come from? That's the stuff you need to talk about. Unfortunately, we don't do that. Unfortunately, we hit the gruesome videos, and we actually help him propagate that, nasty message across the internet. We're playing into their hands, and now it becomes actually more of an incentive for them to do more. 10 airplanes? Holy mackerel.
Yeah. Hey, Fari, just go up. You mentioned Twitter there, and I know you played that thing on the dip. And if I'm remembering correctly, you gave yourself a little time, and I thought you had some Septembers on. Did you?
We covered.
You covered.
We covered.
Okay.
And they gave me a windfall. It was a soup windfall. Okay, that's the thing that hasn't figured it out. The peanut farmer. Remember the oil windfall he was talking about? The Carter peanut farmer.
Yeah, I remember Jimmy.
Now this is called a soup windfall. It came in our way too fast. We covered. I think it was recovered in July or maybe early August. We're out of them. But I know Buriano is setting up, or maybe it's coming up right after me this morning. I think with Ethan. That's the guy you want to talk to about Twitter. He's doing a bunch of what we call high beta strangles. Okay, high beta strangles.
Okay.
That is, when one leg hits, boom, you cover the other leg and then some, and you're buying some soup, and then next thing you know, you're at Magnificent Mall shopping at hopefully at Tiffany's.
High beta strangles. I like that.
I know.
I'm interested. We're going to find out about that in 10 minutes because Ethan's coming up here. Actually, in 8 minutes, Ethan's coming up.
You think you can?
Yeah, I got something better for you. Also talk to Buriano. We've teamed up with Ashraf Laidi, HFT Forex.
Okay.
First trade out day before yesterday, up 65 pips already. And we're getting our second trade up there. We're going to have Ashraf on your program too because he is the authority on Forex. If you look at his numbers, look at his presence on CNBC, a.k.a. Comedy Central. He is the Mr. Forex in this market. Okay, we've teamed up with him with what's called HFT Forex, which is a little bit faster trading, a little bit shorter account requirement than what he does in his own premium insights, and 40-some thousand followers. Very, very solid guy. Book was a bestseller from Wiley, and his concept, by the way, is intermarket currency markets. Okay, intermarket currency analysis. So you'll have him in due time on your program. But no, we have a great team. I'm proud of them. So.
Okay, all right, Fari, final thoughts on the market here. S&P's 2005, all-time high yesterday, 2011. Last couple days we had the fluff in the morning and sold off under 2000. Are you looking? What are your Sigma channels telling you today? We're going to hold
232 on the top.
Okay.
And 1970 on the bottom.
Those
197 on the bottom. This is the cash price. Okay, cash price. Not there. And I know it's fairly close now to September because September contract will expire in 2 weeks. We're going to be out of them next Thursday. Right?
Okay.
A week from today, we're out of the U's that we're going to be in D's. The D's, which is December's. But my target right now on cash basis. So let's talk cash basis. It's 232, 2032 on the top side. That's a 2 sigma. On the bottom, now you got to. This is where the art comes, not the science. We got confluence, and as you know, I'm big on confluence stuff because people trade different time frames. But if they see the different pricing that have a 2 different indicator overlapping, that becomes a confluence because each one could trigger, and you're going to get more massive support or resistance. Is at 1968. Let's say 1970, that's both 0 sig and 50 bar. Okay, 50 bar and 0 sig have a confluence there. So that's the range I would look at. A little bit on the uppy, kind of a bias here, of course. But now, where is the downfall? You always have to state that. I'm not trying to be on both sides of the trade. I'm trying to give you what you also see as a alert that said the trade is no longer valid. Okay, where does the trade get negated? That you need to think about. That's somebody like our dear friend, Comrade Putin, comes over and does some crazy stuff again, which he's been trying to. He's been trying to mess up with the soup out there called NATO meeting. But we'll see. We'll see how that plays out.
All
In
right.
the meantime, since things haven't changed, I would stay to the upside.
Okay, Fari, thanks a lot. We got some major imbalances here that we got to cover here, so we are just going to cover them real quick and then go to Brianna. Tell Ethan we may be a few minutes late here, but we got to cover these imbalances. Thanks for coming on, Fari.
My pleasure, sir.